Good afternoon, everyone. Jason here. Today is August 29th, and this is your aftermarket update. All right, so we had a good day here at the Oil Trading Group. In fact, it was one of our favorite types of days. It was the one and done trade day. Our one trade today net 60 ticks, and we were able to continue this really nice run that we've had in the month of August. However, getting into the trade today was a little bit more complicated than what we normally look at. Of course, we always look at our market maker levels, and those are these levels here represented by the DS mid or DS signal, etc. And these are the levels that we normally look at in here. However, at our entry point today, there was not a specific level to look at. There was a combination or confluence of ideas that kind of came together to give me the entry point today, and I'm going to go through that here with you really quickly. Now, these are all ideas that we talk about in the live room every morning, in the live chat room, and it's ideas that I'll share with you and that you can begin to incorporate once you become a full member and you have access to this information. What we did today, though, is we had a couple of things. So we had this red line right here at 79 represents the sweet spot of our retracement area. The market rallied up into 78. So that was clue number one, as the market rallies up into that zone that we were looking to get short. Now, again, keep in mind, we were talking about the market today being in these choppy to sideways conditions. So we were looking to sell rallies and buy dips. And so as the market rallied up into one of our known resistance areas, we got one tick off the sweet spot, and that's close enough. The market began to retrace. Also, we have our market maker levels, and one of the rules that we look at here is that if the market hits what is going to be one of our levels, in this case the daily structure signal between the 7 a.m. and 8 a.m. open, and right here it got to within a tick, then what you expect at the open is for it to come into the daily structure mid, and that's exactly what happened. Now, the fact that we could not get a bar to A, close above the structure mid, or B, come up into this retracement point up here, and also you made a series of 1, 2, 3 lower highs, 2 lower highs technically, off of this swing high. That was another indication that the market was likely headed to the downside. Now, what we also talked about is this little congestion area around 52, 53. It was in this little zone right here leading into, if you just kind of measured this area right here prior. So this was one swing cluster. Then you kind of came down and you had another swing cluster. And if you just measured this whole area here prior to the open, it gave you a point of control. I'm going to show you this here. Some of you have these kinds of tools, but this is a platform that I use that gives me the ability to kind of draw these market profile here. So if you take this swing here prior to the open all the way down to this swing low, the point of control is this lime green line, and that's right here at 54. So you had this high at 78. The market rallies up into the structure mid at the open at 72. You have this recent swing. You have a high, a lower high, and a lower high all the way down. So you've got some structure forming up. And then you had this point of control here at 54. And that was the genesis of my first idea to take that short here today. And that's the one that we ended up getting into. Now, what you're going to hear as we get into this trade this morning, you're going to hear me say, I'm short at 52. My stop is, and I really don't give you a target right away. So I was kind of torn between what the targets were going to be. Again, keeping in mind that we are looking for to sell rallies and buy dips, right? We were looking for these choppy to sideways conditions. And if you look here today, our total range was 120 ticks. Well, I need to pull this out all the way over here just so you can see that. But the total range today is 120 ticks. And so, again, that's still sort of choppy conditions. It's right in line with where we've been over the past 10 and 20 days, but it's still a little bit choppy on the conditions, no real trending idea. Anyway, having said all of that, I wasn't exactly sure where I wanted to place the target. What I ended up doing in terms of targeting is I ended up looking at these, because if you'll recall yesterday, we had that really good move. I ended up turning on these bigger picture levels, and I ended up looking to try to target down here to 45.52. So we talked about is if we kick this signal, we'd be looking to pay this target underneath. Market comes down, rallies back and forth, it comes down to a new low. I get trail stopped out at 22 for 30 ticks times 2 lots, which is 60 ticks, and the market ends up coming down here to 76. Now, what is interesting to note about this low down here at 76, I'm going to show you this. I don't think this is a coincidence. And this is not something that we talk a whole lot about, but I have this little indicator that kind of gives me previous session points of control, right? And so you can see how easy we came down here to the next point of control right down here at 76. That's where we stopped on a dime and then moved back up. Just sort of interesting to see those previous session points of control and how they have an impact sometime on your charts. Today, we took one trade. We got in at 52. Once we could not get through our sweet spot retracement, the daily structure mid, and we broke that point of control from that formation that was occurring about 3 hours prior to the open this morning. So all of that together gave us a trail stop out of 30 ticks times 2 lots or 22. So as I always do, I'm going to let you watch the video. I let you watch the entry. We get you to the point where we get to break even. We speed up the tape, put some music behind it, and then you can see us as we get to our target. So without further ado, here is today's OTG trade of the day. 52 short, and I'm in at 52. We hit the revision. We hit that structure mid and couldn't get through it. 52 short, stop 63. All right, so you can see that the low on the day is 76 down here. We talked about that area at 76 being one of those previous session points of control. It did come back and sweep us out at 22. This little rally up here to 48 would have been within 4 ticks of our original entry. So getting out at 22 was just fine. That was shaking out all these weak shorts before it did come down and make it down to 76. Had it not done that, we were targeting 52. We wouldn't have made it down there, but I think we would have protected somewhere to 92 to 02. So it would have been 50 to 60 ticks. Having said all of that, that's not the way it worked out today. We did end up with one trade and done, 2 lots, 30 ticks each, 60 ticks total. So again, no complaints here. So again, as always, I want to say thank you for watching the videos here at the Oil Trading Group. And until next time, I want to wish you good luck and good trading.